Hey everyone, welcome back to the tax show for people who owe. I'm Dave.
And I'm Phil.
And tax season just ended. It ended, right, Phil?
Yep, I hope so.
Well, for most of you guys, I think. It was supposed to end at April 18th, meaning you're supposed to file and pay what you owe to the IRS. So Phil, who is this show for again?
Taxpayers who owe.
Taxpayers who owe. So if you did file a return and you have a balance, Phil is going to tell us about some of the options you may have if you can't pay it. So Phil, what are some of the options I have as a taxpayer who owes if I can't pay it?
Well, really, how much time do you need, David, right? So in two big buckets, we have short-term extensions to pay. We call them short-term installment agreements. And those can run up to 180 days. So if you just need a little bit more time, that's readily available to all taxpayers who might have a balance they can't pay right away.
I'm thinking most of our viewers can't pay within 180 days. That doesn't sound like a lot of time, especially for some of the balances we may see. So what are some of the other options?
Right. The more popular one, and we see this IRS setting up about 2 million every year.
2 million, wow, that's a lot.
Yeah, and at any given time, they have about 4 million active installment agreements. And these installment agreements can vary in length and terms. And really, there's a flavor for everyone, just like 32 flavors at Baskin-Robbins.
32 flavors, okay, that's a lot of flavors. A lot of installment agreement types, it sounds like. So what are you looking at specifically, Phil, when you set up an installment agreement? I'm pretty sure you set up a lot of those 4 million.
Yeah, we do. We provide a lot of relief here at Optima, but the things that our tax professionals look for are typically we look at how much you owe, when those debts are going to expire, when those tax balances are going to expire, and lastly, your financial situation. Those three things will kind of dictate what type of options we present you.
So it sounds like a pretty complex formula. Phil, can you give our viewers a general idea what they will have to pay per month, the minimum they'd have to pay per month if they owed, say, $25,000?
Sure, David. So let's eliminate all the other variables such as CSED and say you just owe $25,000 for 2021.
Before we do that, explain what a CSED is.
Sorry, getting ahead of myself, but great question, David. So CSED stands for Collection Statute Expiration Date. And so that is the time the IRS has to collect from you the outstanding tax liability, and that tends to be about 10 years.
And that was covered in another episode. So Phil, let's talk about that payment now. I owe $25,000, the CSEDs are 10 years from now.
Right.
What is my payment going to be?
So the rule of thumb is divide by 72, and you'll get about $350 a month, David.
$350 for that $25,000 balance.
Correct.
Now, $350 a month might be difficult for a lot of American families out there right now who are struggling. Phil, are there any other options in paying that significant amount?
Yeah, like I said, there's a lot of flavors of installment agreements, and there are some hardship options available.
Great point. We will be covering hardship options for you if you can't afford to pay that balance or worried about it in the next episode. All right, Phil, any last words for folks who just filed a recent tax return or worried about paying the balance?
Yeah, if you feel like you're in over your head, contact a tax professional, but as usual, do something.
Do something. And the first thing you should do is download our tax app where you can find a tax professional who could help you understand your options and maybe tell you what you're looking at for a monthly installment agreement. Thanks again for tuning in today, everyone. We'll see you next time. Hey everyone, thank you for watching today. Please be sure to like
And subscribe.
so you are up to date with all the information you need when you're taking on the IRS.
And as always, do something.